The Kardashians flaunt their success in glittering Instagram posts, private jets, $200 million beauty lines, and palatial estates. But behind the velvet ropes, their empire is a masterclass in financial engineering, where the line between savvy strategy and shadowy secrecy can blur. Start with the family's corporate web. Each sister owns a dizzying lattice of LLCs, some linked to fashion, others to real estate, others existing only on paper. In California alone, public filings reveal dozens of entities tied to Kardashian ventures. Why so many? Tax experts explain that each LLC can isolate income streams, shelter profits, and shift losses to reduce overall liability. Then there's Wyoming. Kanye once called it the next frontier, but for the Kardashians it's a financial frontier. Wyoming's privacy-friendly incorporation laws allow businesses to list managers instead of owners, masking who really controls the cash. Multiple Kardashian-related companies quietly moved operations there, taking advantage of looser disclosure rules. Luxury property purchases add another layer. Rather than buying homes directly, the family often uses trusts or shell companies. This tactic obscures the buyer's identity and can yield significant estate planning benefits. When a $20 million Hidden Hills mansion trades hands through a trust, the paper trail stops short of the family name. Internationally, the possibilities expand. Sources close to the industry point to the British Virgin Islands and Luxembourg, jurisdictions famous for low taxes and strict confidentiality. While no illegal activity is alleged, these financial havens allow wealthy Americans to defer taxes legally for years, even decades. The crown jewel of their strategy might be image licensing. Instead of taking personal income from endorsements, Kardashians often channel deals through corporations. When Kim licenses her likeness to a beauty brand, that income can be treated as corporate revenue, unlocking deductions for expenses an individual couldn't claim. Private jets, security teams, even wardrobe items become potential business write-offs. Critics argue that these maneuvers, while legal, deepen inequality. An everyday worker can't park earnings in a shell company in Grand Cayman or write off couture gowns as business costs. Yet tax attorneys insist the family simply plays by the rules Congress created, rules available to anyone with the resources to exploit them. Publicly, the Kardashians downplay the complexity. They present their wealth as the natural reward for relentless hustle. But leaked court documents, from divorces, lawsuits, and business disputes, offer glimpses of hidden trusts and offshore accounts, suggesting far more sophistication than the glossy narrative implies. Consider Kris Jenner's role. Nicknamed the Momager, she's also a shrewd CFO. Insiders claim she holds quarterly briefings with top accountants to restructure holdings, anticipating changes in U.S. tax law years in advance. When Congress floated a higher capital gains tax, the family quietly shifted investments, locking in lower rates. There's also the luxury jet debate. Their private planes spark outrage over carbon footprints, but financially they double as deductions. If travel supports brand operations or appearances, flights become a business expense, cutting taxable income while broadcasting opulence. Meanwhile, new IRS initiatives threaten this carefully built architecture. The agency's expansion, funded to scrutinize high-net-worth individuals, could shine a spotlight on celebrity tax planning. Audits of similar Hollywood empires already reveal aggressive depreciation schedules and complex pass-through arrangements, methods the Kardashians almost certainly employ. This tension, between dazzling public wealth and meticulous private accounting, underscores a bigger question: should laws allow such vast legal tax avoidance? Supporters argue these strategies fund risk-taking and job creation. Critics see a rigged game, where billionaires effectively choose how much tax to pay while middle-class workers cannot. Either way, the Kardashians stand as a case study in modern celebrity capitalism. Their fame attracts scrutiny, but it also grants leverage. Brands pay premiums for partnerships, governments court their investments, and accountants compete to design ever-clever shelters. As policymakers debate closing loopholes, the Kardashians remain one step ahead, proof that in the new economy, image is currency and financial privacy is power. Whether you admire their ingenuity or condemn their methods, one fact is clear: the glittering Kardashian lifestyle rests on an invisible foundation of strategic accounting. Next on Under the Gloss, episode 25 investigates how reality TV contracts, NDAs, and ironclad confidentiality agreements keep the family's most explosive secrets permanently off the record, even when insiders want to talk. Loving the story so far? Go ahead and subscribe, it's free, and it means you'll never miss the next update.